Let's get to the big story of the day. Now, daily infections in India are hovering around the 60,000 mark and inching dramatically and steadily upwards over the last few days. And you all know it, COVID-19 infection numbers are something we're all tracking. The problem is that death rates are also beginning to increase and inch slowly. What's happening as a result is mobility is getting hindered as various states are imposing different kinds of restrictions. Some are calling it micro lockdown, some are calling it containment zones. Whatever it may be, the fact is that it is already beginning to impact economic activity and will continue to do so. The question is, can the very fragile Indian economy withstand this surge, this second wave of cases? We've been speaking all of these months about how we've seen a wonderful V-shaped recovery. That V-shaped recovery is still quite delicate, and the core sector data that came out today underlined that fact once again. So it's contracted 4.6% for the month of February compared to last year. In fact, in the 11 months for which data is available so far, 8 months have seen a contraction. We've seen an improvement in December and Jan that has not sustained clearly in the month of Feb. We know that the health situation is going from bad to worse. This is what the health ministry is officially saying. On the other hand, vaccinations are starting. In fact, from tomorrow, those above 45 can get vaccinated. The pace is just not fast enough to keep up with the pace of infections. So where do we stand right now? To speak on this, I'm joined today by Rahul Bajoria, Chief India Economist at Barclays, and Siddhartha Sanyal, Chief Economist at Bandhan Bank. I want to welcome both of you to the show, and I'm happy to be speaking with you. Mr. Bajoria, let me start by getting your overall take on the picture I've painted. An economy which has rebounded better than expected, faster than expected. This was a conversation we were having all of November and December. Jan onwards, we've started tottering a little. By the time we've come to Feb and March, it's looking like a redux of 2020.
Thanks, Tamanna. So I would say, we are still entering the new year, the new fiscal year, with a fair amount of optimism around the growth side. While there are, cases increasing, I think there are two features of the current COVID wave which makes it a little bit more different than the first wave. So first of all, in the second wave, we have seen there to be a geographical concentration, which clearly is coming across some of the Western states. Now, this obviously is likely to spread out. But then the second factor, low mortality rates, I think is what makes governments, both central and the state, unlikely to pursue lockdowns, because, the capacity on the health side is still much more significant and the treatment protocols are much better. So I think the probability of a full lockdown or any kind of a hard lockdown still appears remote. And our sense is that the growth impact is likely to be very, very limited. I mean, it will be more like a speed bump rather than a complete, a blockade in terms of economic mobility over the next couple of months. But then the situation definitely is fluid. We have to treat it as a downside risk in the ongoing recovery process.
Siddharth, how do you look at the situation evolving? And I'd like your take on the core sector data that has come in today also. It's pointing to a few worrying trends. One of them is that industrial output is not recovering at the pace that was expected. It's still continuing to contract. And the slowing down of sectors like steel, cement, showing that construction activity is also pretty muted.
Well, yes, it's a mixed bag, and it's not too much of a surprise. I think we are all prepared to see some bit of fluctuations in this economic indicators at this moment, and possibly that particular trend will prevail in the coming months as well. You are right. In the beginning of the year, or even from the Q4 of 2020 calendar year, we earlier had seen very sharp uptick in growth momentum in certain indicators, much more than what we had anticipated maybe another 3 months back. But now it will possibly be future recovery will remain somewhat uneven, and it's not too much of a surprise, as I said. But what is interesting at this moment, even though, and you mentioned that all of a sudden in the month of March, it looks like it's a repeat telecast of 2020. Yes, to a great extent, yes. But at the same time, what is very important is a couple of points. Rahul also mentioned that it seems the mortality rate is low, as well as the disease seemed to be concentrated more in the western part of the country. For example, right now I'm sitting in the eastern part of the country, and over the last 1 month, I have traveled in certain parts of eastern India and northeast, and I have seen almost life as usual at this moment. Whether that's a good thing or a bad thing, we will figure out over a period of time. But the fact of the matter is, at this moment, it looks like it's much more concentrated. And what is very, very important, the degree of unpreparedness that we had in March 2020 or throughout the Q2 of 2020, I think given our last 1 year's experience, the degree of unpreparedness is far less at this moment, and that should help us to some extent.
You know, Mr. Sanyal, I'm tempted to come in on what you're seeing on the eastern part of India, because remember there are elections there as well. And apparently those that attend political rallies are automatically immune from COVID-19. So I don't know how closely it's linked. There are, and you know, that's another mystery of these times. There's some states which seem immune, but then I don't know if they're testing as much either. But I'll leave it at that and come to you with the question of how you see this panning out. Because if I take that forward, Mr. Sanyal, if some states are afflicted more by COVID-19, these also happen to be more highly industrialized states whose output contributes more to the GDP. Do you see that as a threat?
Yes, that's a very valid point. That at this moment we are seeing some of the states which are getting impacted more in terms of concentration of GDP at the national level, that the concentration is much more in those cases. But having said that, I would again go back to the point that we mentioned and discussed just a couple of minutes back, that at this moment on the services sector in particular, I think we have become a bit better prepared this time with the experience of last 9 to 12 months, and possibly given that the component of services is much more in our overall growth dynamics, possibly the buffer we are enjoying at this moment is significantly more, and that can actually provide you a bit of a support. I'm not getting into the statistical factors like the significantly better base, etc. we'll be enjoying in Q2 of this calendar year. We'll keep that particular factor aside. So in terms of the just numbers, even that will give us some bit of a boost. But I think the key point is a bit of better preparedness in case of various industries. And even though some of the, better contributing states are getting impacted more.
Yeah, absolutely. Rahul Bajoria, so we know a couple of things for sure. We know that there's not going to be a nationwide lockdown, that manufacturing units can continue to function. There will be very little, hopefully, impediment for them specifically. Even so, what do you see as the major headwinds as we continue on the recovery process right now?
Yeah, so I think it will be the two biggest factors to watch out for here is one, what is the impact on the high contact services like travel and tourism. I think already there are some signs that, travel restrictions have tightened. States are asking for more testing, etc. And, they're asking for more quarantining. But at the same time, there's also, I think, a deliberate pullback by travelers, cutting back on non-essential travel. At the same time, I think it's really the pace of vaccination which will dictate at what pace do we sort of normalize, in terms of mobility. Because what we have seen in other countries as well is that the second lockdowns, tend to have a lot less impact on growth and activity levels. I mean, we have seen this in Europe, we have seen this in UK, we have seen this in several countries in Southeast Asia as well. So I think India will have a very similar experience, but it is really vaccinations which will ultimately help us open up for good, right? And so I think as we open up the eligibility for more people, it is important to track what is the supply dynamics of vaccines looking like, how many more vaccines are we approving, and then how many people are we able to actually vaccinate especially if we can meet the 300 million target that's been set for August. I think that will be a very, very, significant outcome, at least for achieving some kind of a permanent opening up of the economy and particularly of the high contact services.
That's, I think, the key point really about how vaccinations can work. So in Israel, for example, one of the most widely vaccinated countries in the world, we're already seeing signs of infection and illness going down in those over 60. Most new cases have come down, especially in older people. We're seeing similar trends panning out in the United Kingdom. Remember, the UK was one of the first to actually start vaccinations, and they've had enough time for the numbers to pick up where the infections are beginning to come down. The CDC has recently put out data which correlates the rise in vaccinations with the reductions in infections. Mr. Sanyal, do you see that as the only way forward? And what are the issues there really? I mean, we keep talking about vaccinating more and more people, but now even adding the 45 plus bracket, we have a group of, say, 40 crore people that will be vaccinated. There's an estimate that you'll need 900 million doses for them, and fairly quickly. Even with sufficient doses right now, there have been problems of vaccine hesitancy and access in areas outside big cities. Do you see those as the biggest issues, for a recovering economy?
Well, at this moment, yes, to some extent, but at the same time, a lot of these factors you fix at a much faster pace as you start the process or as you progress in this particular process. So possibly the rate at which we are vaccinating today, eventually a couple of months down the line, we might start moving at a much faster pace. And the element of hesitation on the part of people, my sense is that the way it's panning out, it will be very likely that over every passing day, the degree of hesitation will eventually come down and down. So overall, on the vaccine front, though at this moment there is room to increase the pace, my sense is that a month or two down the line, we'll possibly see a better rate or more encouraging rate there. Just trying to link back, another factor to your overall theme of recovery and the state of the economy. We discussed that how we are better prepared and how this particular time, the effects are more concentrated in some of the states. We are not expecting any nationwide lockdown. All these factors are fine. But at the same time, I would possibly just touch upon one particular point what still worries me quite a lot at this moment is if there is one particular point that worries me the most, it's possibly the pace at which we get to see consumer confidence improving. That's actually improving, it's true, but improving at a much slower rate than what we would have loved to see. So for example, there is a bit of a divide between urban confidence and rural confidence is slightly better compared to urban confidence. But the level from where it has fallen where it had been in the pre-COVID level, they have fallen by about 50% from the pre-COVID level. In certain cases, close to 60%, and from there they have recovered only a bit. So there is still a very significant room to catch up in terms of improvement in consumer confidence. Now, why this is very, very important is that at this moment, even though we are seeing some bit of uptick in the overall growth indicators, going ahead in order to for this growth momentum to sustain, the key component is really consumption in India's context. So we would love to see actually a much faster catch up and uptick in consumer confidence, both in urban and rural India, in order to see the growth momentum sustaining at a decent pace.
Very true, very true. And of course, that consumer confidence uptick will also be linked at how far we can and how fast we can push down these extensions. Mr. Bajoria, do you want to hazard a guess on any timelines as we see it for the next fisc? When do you see possibly vaccinations and its impact kicking in and that business confidence returning?
Yeah, so I think in terms of the timeline, actually, India is already running a little bit ahead in terms of the schedule that we thought India was going to largely adhere to, looking at the supply dynamics. of vaccines. I think it is quite likely that we will be close to around, by our calculations, around 285 million people vaccinated by the end of August, so just slightly below the 300 million mark. And then by the end of this year, I think we could be close to around 500 million people vaccinated, if the supply dynamics hold up and the vaccine hesitancy declines, as Siddharth was talking about. So I think it is possible that by the end of this calendar year, by end of 2020, maybe, hopefully before we'll be a little bit ahead of the cycle to, capitalize on the festive season. But then I think by the time we hit Q4, we should be, largely normalized from a vaccination standpoint. I think that will really pave the way for a complete opening up of the economy as we enter 2022.
Absolutely. So another 7 to 8 months to go. And the faster we can vaccinate, the faster that goal can be reached. Thank you so much, Mr. Bajoria and Mr. Sanyal, for joining us today as we take this status check, I would say, of the Indian economy, even as a second wave hits us. Thank you so much.